All right, hello everyone. I'm just going to wait another minute or two to see if more people come, late arrivals, with earnings season being pretty busy after hours here. And I'll start up in about 2 minutes or so. For those of you that are here already, if you have any questions throughout the webinar, you can click on the question box on the screen. It should be the GoToWebinar screen, and you can type it into the question box. I'll try to address each one as I go along. I'm going to try to hit certain topics, so if you have a question, just feel free to throw it in, and I'll glance over at the question box and try to answer them. I'll give it just another minute, and I'll start up. All right, first question already, before I even started the webinar, was will there be a copy or available for downloading afterwards? The answer is yes. Most likely we're going to email it out to those of you who've signed up for the webinar. I believe a copy does get emailed out, and I believe we also keep it archived on a site called Viddler, VIDDLER.com. It's like a video webcasting site, I believe. Don't quote me on that. I'm not sure, but yes, it will be recorded. All right, so I'll get things started here. I would like to thank all of you for attending this webinar. It is entitled Trading Technical Patterns with Your Briefing Trader Service. For those of you that are brand new to the service, my name is Scott Smith. I am a Senior Technical Analyst here at Briefing.com for the last 8 years. I've been trading the market since the late 90s during the internet bubble, and somehow managed to survive the last 10 years still trading. So figure I kind of have enough experience to know what I'm doing with the charts. I'm also a CMT, which is a certified market technician, so I have that background as well. Today I'm basically going to be focusing specifically on the technical scans that we provide through the Briefing Trader service. And if you look at the page, you can find them through they're called the TA page scans. And when you click on them, they bring you to this table. And this is a table that I created probably about 5 or 6 years ago. And essentially, it's just all the patterns that I've noticed over the years that I found to be extremely useful in trading. You really have to kind of just nail down certain patterns, certain types of setups that you tend to favor and tend to like, and certain ones work really well under certain market conditions. And I feel like this table really exemplifies what all the knowledge I've accumulated and experience over the years. It is a mechanical system, so in other words, I programmed the computer to specifically look for these price patterns, and that's all it is. It's not back-tested. It's not meant to be some sort of trading system that you just blindly follow and go in the next day and hit buy or sell because it says long or short or up or down. It's just a setup to basically narrow down your research and your nightly or pre-market homework that you're doing, looking for opportunities. And that's really it. I mean, it does take everything else from there on is more of a discretionary trading viewpoint, and it does take a little bit of technical experience to actually get used to these. But I'm just going to walk everyone through it real quick. It's real simple stuff. You're not going to have to learn any complicated. If you're not familiar with technical analysis or patterns, it's not like you have to learn about cup and handle patterns or a certain type of wedges or full flags or etc. It's really straightforward price action. None of these setups are based off indicators like RSI or MACD. It's strictly price pattern recognition. All right, so to go forward, there are 14 scans here. I try to put up about 20, up to 20 under each one, depending on the day. And if there's more than 20, I'll filter for the ones that show the highest volatility and the highest volume for that day. I want to stick with a lot of them are, the main purpose is day trading and swing trading these names. So you want to stick. I want to really try to filter it down to like only the top momentum names. You're not going to see a GE or any stocks trading under $10 on this list ever. It's going to be much higher price stocks, stocks that tend to move $2, $3, $4 in a particular day or over the course of like 2 or 3 days. And it may seem a lot at first. When you look at these stocks, you're like, oh my gosh, I have 20 stocks, in each one, and there's 14 scans. I don't have the time to look at over 200 charts each night. That's not the case at all. By any means, you can see it right at the top here. I mean, there's only 5 stocks on the pullback long candidates that were available for today, 2 on the short side, 1 on the oversold, maybe about 9 or 10 here for the overbought. And it shouldn't take you any more than, I'd say, 10 minutes max to just go through certain names that just stand out or jump out at you. I have my favorite stocks that I like to trade. And I'm going to look at those stocks and look at those charts just to see if there's a setup. One of the best pieces of advice I've ever gotten in technical analysis is if you look at a chart and you can't identify if you should go long or short within 2 seconds, then you're doing it all wrong and you should just move on to a different chart. You basically want to focus on the most simplistic chart patterns that are out there, and you want to just look at a chart and say, it's going higher, I need to be a buyer at this point, there's my risk there. Or I need to be a seller. I need to be short there, and there's my risk. It's that simple. If you make it any more complicated than that, it just tends to get a lot more messy, and you just tend to be burned out a lot easier. To move on, let's say, so here's the scans that we had for today. There is a page right here that says click for further details and examples of the scans. I'm basically going to spend the next 10 minutes or so just walking through these, along with some other recent examples in the market that we could have traded. The key thing to remember with any of these scans, also to narrow down your search, is to take in context what the market is doing itself. If we look at a quick chart of the S&P here, and you can see that we're in a clear uptrend for almost 7 weeks now. This is the 20-period moving average. The market's in a clear uptrend. You really probably don't want to be focused on any of the pullback short candidates or the overbought scans during such markets like this. Their work, but they're just more higher risk plays. You want to be more focused on the inside bars, the dojis, the pullback long candidates, and even the oversold candidates in circumstances like this. It's always important to identify where you are in the market itself. Bullish or bearish environment, or even just a sideways trading range, and then try to find the scans that best fit those. Let's see, I'll go back to that page. All right, the first scan is a pullback long example. I designed this one, basically it has to be a stock that has to be in an uptrend as defined by the 20-day moving average, and you're looking for essentially 3 days down, three lower highs. That's it. And you can easily just, the CE was a recent example here in January, and you can see it was 1, 2, 3 days down and started to rally out for a chance to get in on the long side. Your risk would probably be down here around the prior day's low, or even that day's low as it closed at the session high. And the target is usually the high of the move itself, which it reached about 2 or 3 days later with a nice extension higher. Again, these are ideal for day trading. If you're day trading these, you want to be long, probably above the pullback high. And if you're swing trading, you want to just let some of it ride or take a partial profit and just let the balance ride above the 20-day period moving average. You can see the stock extend up to 50 a few days later, and then it's set up again on the scans. Here this time it looked like it was 4 lower highs, 1, 2, 3, 4, and then once it crossed back above the trend line, it was easy enough to get back in on the long side there. Now, obviously, I cherry-picked this example because it worked really well. But it's always best to wait for some sort of confirmation on these trades. There was an example today, I believe. We had Joy Global. This was an example of a pullback long candidate that we had. And you could see it was down 1, 2, 3 days. Here's a 20-period moving average. If you're more aggressive of a trader and you think it's set up for a bounce, you could have got in probably around this morning's opening. Personally, I like to see some sort of strength. I would have liked to have seen it break this downtrend line. And you can see what happened. It actually traded down about $3.65 today against the rest of the market strength. And these, like I said, these are not back-tested, blindly trading system types of methodologies going on here. It's just supposed to identify and shorten your time for searching for good setups in the market. You could have even said, go to a 60-minute chart. If you have trouble looking at the trend lines, you can always go to a 60-minute chart intraday and just look at your trend line over the last 3 days and wait for some sort of confirmation above there. Again, here's the 20-period moving average on a 60-minute chart, which you could have waited for price to get back above there. Another little trick would be a 5-day moving average. I tend to use that a little bit on my other charts. Let's just change that here. Waiting for some sort of entry or close or move above a 5-day moving average is also very helpful in determining that the momentum is now shifting back higher. So just another example of a pullback long that did not work. Down here, back on the example page, we have a PNC. It was a pullback long candidate. It looked like it failed. It triggered here back in December. It kind of triggered above the higher day's low. Didn't take out the previous day's low. But overall, the 20-day period moving average was moving higher. The uptrend was in place. You could say the bullish flag was in place. The pullback was still in effect. And sometimes you can't. If you're day trading, you have to get out. So you don't want to take the loss overnight. But other times, you always want to keep these stocks on the radar. Because they usually maybe take an extra day or two just to really trigger. And sometimes those are even the strongest ones that will take effect. The pullback short candidate is exactly the opposite of the pullback long candidates, being the 20-day moving average is usually sloping lower and price is rallying into it. Usually it's a series of 3 higher lows. In this case here, we see Omnicare back in January had 3 higher lows, actually 4 higher lows, and it was best to wait. Even though it failed the 20-day moving average, it's usually best to wait for some sort of confirmation, and you can get in right underneath that low there around 34, and you can see it took out. Initial target would always be the beginning of the prior swing move down here, and you can see it was pretty much good for a solid $1.50, $1.75 gain that day. Hess was another pullback short candidate back in December. In this case, it started showing up on our scans on the 3rd higher low, and actually showed up on our scans, stayed on the scans for probably the next 6 days. As it made another higher low, another higher low, and another higher low. And it wasn't until the 7th day that it actually triggered, and you could see that that was the mid-December sell-off, and you could have held on to it for a nice swing down there. Generally speaking, when the price gets back above the 20-period moving average on these pullback shorts or the pullback longs, if it gets through the 20-period moving average, it starts to lose some of its weight. For example, I'll show you Hess. So Hess worked really well as a short candidate back here on this setup over here. However, over here, it actually set up again as a short just on February 2nd. And let me see if I can zoom in here and make it a little bit better. So here you can see that the stock traded down. 20-day moving average, the blue line, was sloping lower. And here's where this 5-period moving average comes in play as well. You probably want to wait for a confirmation of price moving back below the 5-day moving average to get short, or at least a lower low to get short. And once price started probing the 20 period moving average, and then it jumped up through here, you know, the whole trade is off. The whole setup is gone. You know, you want to really see price follow through on all these setups, and you know, that's key. If you're not waiting for follow through, I would recommend, you know, you're probably being too aggressive, and you're probably over trading to some degree. And if you are doing that, you should at least be considering trading half size to like at least test the waters. You know, maybe fade a stock on a half size position as opposed to actually going in 100% and then getting squeezed out of it in a scenario like this. The next setup that I want to focus on is called the power up. This really is a series of 3 consecutive higher trending days, or in the case of power down, it's going to be 3 consecutive lower trending days, where the closes are 3 consecutive closes are higher than the previous day's highs, the higher highs than the higher lows. And there's usually some sort of increased volume that's associated with it, and often there's also a wide range bar that's associated with it. Overall, it kind of suggests that there's some sort of accumulation effect going on in the stock. It's not in and of itself a buy signal. However, it should be kept. These stocks should be kept on the radar. So as soon as they start consolidating or they form a little pullback, you can actually consider buying it on the dip, or you can actually wait for the resumption of the new uptrend. This stock here was Select Comfort, and you can see it showed up on our scans as a power up here at the end of December. And after about a couple of days of consolidation, and there was one corrective bar here, price resumed higher, broke out above 22, and eventually made it up to about 24.5 in a short time frame, and continued trending higher with the market. Monsanto was one that showed up in early January as a power up. It kind of slipped into a consolidation pattern over the next week or so, managed to hold a decent support area, and has been trading significantly higher here since February. And you can notice that the volume, you usually want to see volume pick up significantly as well, well above the average of what it's doing on these power up days. A few examples of power up days that I wrote down here recently was Ariba. This actually showed up on the scan for about a week ago. You could see the stock sold off here in late January, but you had a couple power up moves here, 1, 2, 3, 4, 5 power up moves, higher highs, higher lows, increased volume, and after about a 3-day pullback, the stock just launched higher today. So that would have been ideal for a long setup. Another one that I have on the list that's on my that signaled a power up a few days ago was BTU, Peabody Energy. You can see that the volume picked up. The stock traded up 1, 2, 3 days in a row, higher highs, higher lows. There's a nice little 3-day pullback in effect here. So right now, I have this on my watch list as a potential long over the next few days. Ideally, I would like to see it get back above, say, this 38 area here and break out above 39. There's another coal stock is ANR that showed up 3 or 4 days ago as a power up, 1, 2, 3. You can see significantly higher volume here early February. Nice little pullback action. Just take a trend line, draw it down. I would like to see it kind of break above this 23.25, 23.50 area, and hopefully continue up towards like this vicinity, 24.25, for probably a swing basis. If you're day trading it, you really just kind of want to get, it's a nice setup to be focused on, because there's a long side bias that's probably here. If it takes up this high here, you probably have some stops triggered. So you can probably easily squeeze at least 25, 50 cents out of it when it does trigger. Another one that showed up on my list a few days ago was this Technical. Again, high volume, little pullback action going on here. Probably want to see it, prove itself above mid 38, 75, maybe even get back to 39 area, to see another leg up develop there. Another recent power up move too in early February was Costco, and you can see the volume increase for 3 days in a row, 1, 2, 3. Nice big wide range extension. Nice decent pullback going on here. This is probably going to show up on my pullback long candidates for tonight, because you can see there's 1, 2, minimum 3-day correction. 20 period moving average is moving higher. So it's got a lot of things going for it right now. It's got strong volume, slight pullback. I definitely would like to be, consider the stock as a long opportunity somewhere, say 84.75, back above the 5-day moving average, or the 85 level. I'm sorry, I'm getting over I was sick the last few days, so I'm kind of getting over some cold and stuff. Power down move. Exact opposite of power up move. A lot of these are just opposites. The scans are just opposites, bullish and bearish. You can see COG had 3 consecutive down days here in early January. In itself, probably didn't look that horrible, but there was an uptrend in effect that was going to be challenged. And on that 4th day, it actually broke down, took out the prior week's low, just started taking up this swing low here at 38, and the selling pressure just accelerated. I believe natural gas itself was selling off at that time, and there were a bunch of other natural gas stocks at the same time that were also starting to get hit really hard. So this was ideal for it was at least, I don't really like to jump aboard the next day of a power up, power down signal, but in this case where the trend line is broken, or if it results in a breakout of some sort, it could be worthwhile. That's that example. The other thing to take into account too is, back to the whole thing of context. You have to look and see where the market is. Is it oversold? Is it overbought? You can use just simple stochastics, RSI indicators. I mean, those are always great, or McClellan oscillators. Whatever method you have to just determine the market's overbought or oversold is great. And you don't always want to jump upon like the power down at the end of a move that's already been an oversold market that's been down 5 days in a row. In this case, I show that OIH had in late mid-November had 1, 2, 3 power down moves. It was followed down by 2 more. It seems kind of like an exhaustive phase. You probably don't want to start looking at shorting down at this level. And you can see it rallied back real hard after Thanksgiving. Actually failed at the downtrend line off the November highs and the October highs. And then you had 3 more, 1, 2, 3 power days down, a bounce day. And once you get that bounce day, then you want to start looking for maybe shorting the next day, or in the continuation of a power move. And then you can see that actually resulted in another power down move, 1, 2, 3 days. By then, you got a 4th power move down. You got a bounce. You have almost a 5th power move down. It starts to get too extended. The market itself is oversold. And it turns around and it starts to rally. So you can also use power downs and power ups as almost overbought, oversold signals, depending on how long they consolidate or pull back for. I do have a couple of questions coming in here, so I'm going to try to answer them before I get off the topics. Do I have any kind of scans that pick up technical indicators? I'm assuming you mean just like RSI, oversold RSI, stochastics, etc. There's none on briefing that I know of. We don't publish actually anything like that. We focus more on price action itself, trend lines, and moving averages. We tend to shy away from saying that RSI 14 or RSI 5 is overbought. But you can look into certain columns, like I write a swing trader column, and my coworker writes the technical take, and we're constantly referencing overbought, oversold stochastics, MACDs, and RSIs just to get a better judge of context of the market. After running the scans, do I pick the ones I want to post, or do I post all the results of the scan? Again, the cutoff for the scan is $10, and I also like to keep a focus on stocks that are trading above 500,000 shares. I also like to have an ATR, average true range, of at least 1, sometimes higher, and I try to narrow the scans down to just 20 per scan. If it's more than 20, then I'm going to start messing around with those numbers. I'm going to move the volume up to 1 million shares. I'm going to move the ATR up to 1.5 or 2, depending on volatility. Or I'll even raise, if I really have to, I'll raise the price up to $20 or $30. My main focus is I want momentum names. I want institutionally sponsored growth, momentum, high-price stocks that I know are going to have some juice in them, have some momentum, that they're going to move 2-3 points over a short period of time. I've never really been big on trading low-price, single-digit stocks, trying to go for percentage moves. So yes, I do. I don't cherry pick any of the scans, but I do filter if they are. I do start filtering out if there are too many. For an inside day, can I look at DEX action today? Sure, I'll take a quick look at that. Sure, DEC. Now, let me just see if this was this set up as an inside scan for today, inside day. All right, so for today, we have February 9th. DEC was an inside day. And this is a perfect example. This is actually going to lead me right into my next segment, which is actually inside days and dojis. The inside days and dojis, they're probably one of the more trickier patterns to trade, essentially because they represent either two things. They're either going to be a rest in the current momentum, or they're going to be a reversal in the current momentum. And you're not really going to know which one is, whether it's going to be a rest or a continuation or a reversal until price actually reveals itself. And so in the case of DEC today, it did show up as an inside day, and this is a classic pattern that I like to use. This actually looks like it showed up for 2 days in a row because it has two consecutive higher highs, two consecutive higher lows, and two consecutive lower highs, which is a really nice step to focus on. In this case, you can see that a price broke out, and you usually want to wait to see a breakout of the outside bar day. You never really want to take the trade off the inside bar because there's initial stops there. They tend to get triggered and fail. So you usually want to wait for the initial bar or the outside bar day to signal an entry. And in this case, you can see price was triggered along at 87.65. It traded as high as 89.25, which was really nice for a day trade because that's about 2 points or so. And then it came flying back in. This type of signal to me is a false signal. It's a false breakout, and I would personally be looking for this stock to continue to the downside, most likely tomorrow or the next day or so. If the market actually does eventually pull in, and if it does pull in tomorrow, I would say that this would probably be on my radar to short, probably below 85.50 or so. And of course you have to maintain your proper risk, being around 86.75, where the stock broke out 87.50. But yeah, that's an excellent example of the inside day and why these do look like one of the more trickier patterns. Using DEC again, it looks like this was close to an inside day over here. Probably didn't show up on the scan, but this is a good example of what you want to see on an inside day. Is usually you want to have a really wide range bar, and you want that inside day to be in the upper portion of it, and you want to wait for the next move to occur in the direction of the initial day of that first day. In this case, you had say this. It's not a perfect inside day, but that's essentially what we're looking for. To use a better example, go back to this screen over here. Scans. Inside days. LinkedIn. This is a good example here. So this was actually coming off a power up move that was signaled by our scans in mid-January. It had an inside day here and had two inside days here. And then you had a nice clean breakout above the initial day, and a nice solid rally. It looks like for almost about 3 or 4 points that you could have jumped aboard. LinkedIn is actually a really good example too. Recently, I believe it was a pullback long candidate for February 2nd. You could see 1, 2, 3 days. It was in context of its uptrend. And it had you taken the trade as it rallied up at a 75, 76 area. You had a nice little extension up to 82. It looks like it's also going to be setting up for another pullback long. Actually, it was a pullback long candidate last night because I had 3 days down. It looks like it held the 20-period moving average, and it's probably going to set up as a pullback long candidate for tonight's scans, as well as a doji setup, given the open and the close are so tightly together. For those of you that don't know what a doji is, it's a candlestick pattern, essentially stating that the open and close are really, really close together. It's suggesting indecision or a rest in the current momentum. So right now this looks like a rest in the current downtrend momentum, and it could possibly mean that the uptrend is going to resume, or you're going to see a continuation lower. Before I go on, I did have a few examples of a pullback shorts and I just wanted to cover quick. Pullback shorts. This actually showed up early February, right here for February 3rd. Varian Medical. The key thing here about, I mentioned this earlier with the Hess chart, is if the stock starts trading above the 20-period moving average, and the 20-period moving average starts turning back up and price starts going above it, the short's probably no good anymore. I mean, at that point, the momentum is definitely shifting back into a more neutral stance. You want these shorts to trigger after 3 days or 2 days, pretty much right away. And you can see here in Varian, price actually started rolling over. There was some hesitation, but then once it got below the 5-period moving average, it really started to accelerate here. And this is interesting, an interesting stock because the market itself has been trending higher over the last 5 days, and this one actually is pretty weak. Another one that was relatively weak the last few days was Humana. It showed up as a short candidate, pullback short candidate right here on February 1st. And you can see here's the 20-period moving average. Struggled to get back above it the last few days. Took out the low, took out the trend line. I'm assuming this is earnings. I think it's a downgrade, actually. But then the stock just started gap down and came back. And this is always your initial target, is the next swing. You probably want to take some sort of partial off when that triggers. Sorry to jump off course there. I'll get back onto the doji days. This example I have here is of Sears. And you can see that this actually showed up as a power up day back in late January, 1, 2, 3. It was actually an overbought candidate, which I'm going to get to next. In this scenario here, it pulled back and it started showing up as a pullback long candidate. Couldn't take out a prior pullback high at all. Couldn't really significantly get back above the 5-period moving average. And then here on February 1st, it showed up as a pullback long candidate, an inside day, and a narrow range doji where the open equals to close. And again, those start to signify either reversals in effect or some sort of continuation of a trend. And you can see the next day we got the higher high. We had this little downtrend line break. Price closed above the 5-period moving average, and the price started to resume its uptrend over the last few days. Another example that I was watching for today that showed up on last night's scans as a doji was Baidu. And you can see the momentum is kind of just trending higher here, as off these lows here. 20-period moving average is going higher. Price is kind of just sitting along the 5-period moving average. But then as soon as it triggered right above these highs, this is where I set my alert. Hopefully you have a software or that you can set some sort of alerts on. But as soon as it started taking out the 2-day highs, and then even this 3rd-day high here, there was more confirmation on the intraday chart. We actually posted this to the Trader in Play service to alert subscribers that this stock could potentially be on the move. Here's what a 5-minute chart looked at when we highlighted it. This was a nice little jump here on volume, right around 11:45 Eastern. There was a nice jump above its opening range and started breaking above those prior 2-3-day highs here, and just took off from 133 to 135.5 for a nice trade. Or a nice swing long if you're holding long. I would also want to look at F5 real quick. Let's see, what did I do here? F5 was an inside day, and this is another example. Stock's trading above near its highs, prior resistance area. It had a big gap on earnings back in mid-January. And it managed to actually come back down and hold that gap support, which is really a strong sign. Which what you want to see when a stock gaps up on earnings. You want to make sure that the gap tends to hold and not come flying through it. Price turned around, and it showed up as an inside day here for February 3rd. So this would have been a better example of a stock that you could have taken along above the first day's high and then caught a nice little breakout here for a little gain as well. Back to the tutorial page. Amazon is a perfect example. It's actually opposite of what I just recently showed in Decker's, D-E-C-K. So you have 2 inside days going on here. The price broke out. It was good for a short trade. You could have even carried a little bit overnight and probably made an extra few dollars. But then the price reversed hard, and once it trades back up through the apex of that little 2-day consolidation or inside bar, it turns higher, that's usually a sign of a false breakout or a false move, and it's usually going to move much stronger in the opposite direction. In the case with DEC, I would definitely keep it on the radar, as it looks like we just had a very similar pattern here. Doesn't mean it's going to completely break down here, and do drop significantly, but this type of double inside day false breakout, the stock needs to prove itself. Buyers need to really step in sooner than later and get the stock significantly back above 88, and start pushing it higher. It looks like even the 20-period moving average is starting to slope lower too, which doesn't look so hot for that stock. Let's see. Why would I not be a power up move? Why would I not be a buyer on the power up move once it makes a higher high? As to waiting for the confirmation move. You can, by all means, you can. Again, these are not. This is not designed. These scans are not designed to be an exact black box trading system. You want to just use them. I mean, the point is that each night as traders, you want to go home. You want to look at just a few charts, a few solid setups, identify the charts you like or the stocks that you like that have some momentum, and just zone in. You don't want to sit there be plowing through every single sector and going through utility stocks and crush stocks and everything that moved in the day. You want to just really kind of, if you're busy like most people are, you really just want to narrow down your focus to the stocks with the greatest potential in the shortest amount of time. And this is really what the scans are designed for. So if you find that the power up moves are better buy signals right off the bat after observing them for a while, or waiting for it to break some sort of trend line, then by all means, that sounds great. Let's make it higher as opposed to waiting for it to break it down. Let's see. I'm not sure if I totally read that question right, but you can always shoot me an email. I'll give my email at the end of this webinar. Just want to move things along here because I know people have lives beyond the market. Yes, overall, you definitely want to wait. There's two big things that I want people to get across when you're looking at these things is context of the market. Are you in a bull phase? Are you in a bear phase? Are you overbought? Or are you oversold? That should definitely help you focus on more of the appropriate technical scans. The second thing is to wait for confirmation. If you're not waiting for confirmation, I suggest you've got to be focused on the intraday action. You got to be focused just on reversals and moves and supports and pivots and just key levels in general. And I would also recommend trading smaller size. If you're still if you're like essentially buying weakness on a pullback long, waiting for it to go higher. You wait for confirmation. It's not always going to work. You're probably going to get you get triggered into trades. And there's a good chance that you might just turn around immediately and fail on you. But again, that just comes through experience. Let's see, which ones you want to follow during the first trading day? Which ones show the most opportunity? Occasionally I refer to something approaching the opening range. What time period? Opening range for me, it's usually the first, anywhere between the first 5, 15, and 30 minutes. I know that sounds kind of vague, but it's, it really depends on the width. Essentially, I'd say I go with the first 15 minutes, generally speaking. Here's an S&P chart. Opening range is really, where are the first two swings? That's the way I identify it. So right here, you can see today the market opened up. Here's the opening range high because it came down, and the next swing happened right around here. You can see, well, this was the next up bar. So for me, this would be the opening range. It's not determined on a predefined 5-minute chart, 15-minute chart, or whatever. It's where the two swings identify themselves. And that's where I would define an opening range in a stock. Going back to yesterday, it was a little bit better. You could see the opening range. You had a swing here, and it swung back up here. So that would be my opening range right there. Hopefully that's clear on a 5-minute chart. Obviously different days is going to be different. If I look at a stock, it might be actually different too. I hate to even use Apple as an example, but Apple, let's see, it went up, so there's a bar that goes down. So that looks like your opening range high, because the second bar actually closed lower. You're looking for a change in trend to identify an opening range high or low, and then the opening range on the next bar, on the third bar, actually turned back up. So then, therefore, I would establish the opening range to be the high and the low right there. Hopefully, that's pretty clear. And if you use that in your trading, you'd actually you find out that stocks definitely have a tendency to they rotate. You're going to see order flow revolve heavily once the opening range is taken out or not taken out. Here in this case, LinkedIn. This is for today. Here was the opening range high for the day, and then it turned up there after the first 15 minutes. So I would say the opening range low looks to be right around that vicinity there. And you can see after the first hour when I took it out, the sell order started triggering, and you got a nice little short going on here. And then once price started trading up back through it, it kind of goes back into this opening range. Opening range high looked like it was right around there off the opening. I guess you could argue it was here as well, and then it stalled out there around noontime as well, and then came through. And then a surge in volume broke through it later on. I'm digressing, though. I apologize. Back to the setups. Again, I would highly recommend just reading through it. A lot of these are just examples of what I'm just talking about here. You can see Walter Energy was a really great stock to be trading in the last few weeks. It had a nice power up signal, 1, 2, 3, which was also a wide range breakout, which is going to lead me into the next set of scans. You had a doji with the next day, and it's arguably inside day. It looks like the high was higher, but this is the kind of inside bar you want to look at, or the doji you want to look at. It usually follows a wide range bar, and then you want to see continuation of that trend. If it's just an inside bar, it's a lot more difficult to determine if it's going to be a continuation or if it's going to be a shakeout or a reversal. You usually want some sort of trend qualifier or signs that are leading up to a doji to tell you, to give you that edge, to tell you where that next direction move is going to occur. CF has a number of dojis as well. Again, these are where the openings, it's a Japanese candlestick term, where the openings essentially are very, very close to the openings are very close to where the closes are very close to where the opening was. I've also filtered out to, I believe, to have be a very narrow range, one of the more narrow range that the stock has experienced over the last few days. So that way, when it does accelerate out of these doji patterns, it should lead to a wider range, stronger directional move. Overbought, oversold candidates. This is just something I kind of messed around with over the years because, markets definitely tend to get overextended, and you're always trying to, there's always a group of traders that like to go counter trend. This is definitely one of the more riskier scans that I have labeled out there, just because you're fading momentum, or at least you're trying to fade momentum. It's based upon a series of where price is in relation to its 5-day average range. And I also include some proprietary other signals that I've added and included in to tweak it a little bit more to find really overbought names. But generally speaking, the best advice I can give on these is wait for a reversal signal. Whether you're going long and oversold stock or whether you're going short and overbought stock. One of the best setups I've found is actually when price actually opens up and gaps up just a little bit above the high and then reverses into negative territory below the previous day's close. Those are usually pretty good shorting opportunities. Vice versa on the oversold side. When price gaps down, you want to start seeing price reverse and buyers start stepping in, taking it back up into positive territory. And they're usually pretty good for an overnight trade, sometimes a swing trade, depending on how they work. The ones that tend to fail more often on these are the ones that stage some sort of inside day. So if it's an overbought signal and the next day is, let's see, I have a chart over here. Let me move that over. Let's see if I can do Hess. I believe Hess was a good example of what I'm talking about here. So I'm pretty sure Hess showed up a couple days ago as an overbought candidate. It's probably a power update too if I look at it without the volume. So you had 1, 2, 3 strong days. It looks like the price extended higher above this 5-day average range and came back in. So it's probably good for some sort of short or minor correction or pullback. If you shorted the opening, you probably would have got a nice little drop out of it. Let me take this off. And but you can see it was an inside day. It didn't actually close below a prior low. Didn't really do a gap up reversal type of move, and you can see it just accelerated higher. In this case over here, it looks like it probably could have had another overbought condition here, and in this case, price just gapped down, and those are also good scenarios too. When you gap down from an overbought condition, it tends to, selling tends to kick in a little bit more aggressively. You can see Google showed up here as a prime example, and then a day later, it started rolling over and breaking down. Deere, this starts showing up as an overbought candle. Again, this is where this comes into play, where you really kind of have to take into context what the market's doing, what you're looking for. It looks like it sold off a little bit, took out the prior day's low, but then closed higher. That's a signal to get out. I mean, it just tells you that the stock's not ready to go down. When you get short a stock and you start fading momentum at extremes, you want that to work in your favor immediately. Otherwise, you're going to get caught in this momentum trap that's just going to wind up squeezing you out eventually. Oversold candidates. Again, taken in context is huge. This stock here, Philip Morris, gap. This came to, I think there was news or earnings. Price broke down significantly, and it's already had been pretty hard hit from about $79, $80 down to 73 for Philip Morris. And if you wanted to just step up and just start buying on the next day, you could have done that, I suppose. I would have liked to have seen the 73 level probed, taken out, and seen some sort of reversal first. Ultra Petroleum and a series of other natural gas stocks over the last few weeks have really been hit hard. You can see they also had power down moves. They started showing up as oversold candidates. They took out the prior day's low, and then they started to reverse, and some sort of bounce was taking an effect here. Let's see. LinkedIn gapped up on earnings tonight. Oh, it's good to know. So that's going to be a tough one to trade tomorrow. I usually don't. So LinkedIn would have showed up as a pullback long candidate for tonight, and this is actually ideal for a pullback long candidate. And it should be trading up pre-market, 3 points, I'm told. Yeah, I suppose you could probably take a chance. I hate chasing gaps. I would not say I start chasing at the opening. And the ideal entry probably would have been around 78, 79. Maybe a half a position, quarter position. It's already seems pretty somewhat extended, and the market itself is looking overbought, so you never know. But yeah, it seems like it's something that may be worthwhile entering around $80, maybe on an opening range breakout. You're going to have to take it all into context, but it's definitely going to be on the radar for tomorrow. Let's see, how do I assess Apple? That's been up for days. It's overbought. I actually think it's parabolic, but it looks like it wants to test or at least challenge 500, or at least close above 500 for at least a day before sellers start kicking in again. I don't. That's just that's in its own universe. It has been for weeks now. Do you need to have volume confirmation on a move? Not necessarily. These scans, only scans that really contain volume in the calculations are the wide range breakouts and the wide range breakdowns. Those are the ones that tell me that there's some news-driven event going on, or some earnings, or some sort of big institutional or fund or portfolio is just diving in strong on that move, on that trend break, or on that significant move. So that's why I think they're worthy to follow. But I don't think on any of these other scans that volume is significantly important. At least I haven't noticed it. The scans are usually posted after the market closes, anywhere up until 6 o'clock Eastern. On the days that it's not posted within 2 or 3 hours after the close, it's usually because I'm on vacation or I'm sick and I have to have backups to it. And so that's basically it. It was actually late the last on Monday and Tuesday because I was sick out of the office. But they should be up pretty much within 2 to 3 hours after each close. When drawing trend lines, why are you not going to the top of the closer bars? Drawing trend lines I think is subjective. I have a guy next to me. He actually uses really, really thick trend lines. So I mean, he can actually sit there and draw. He uses like a 5 setting. So to him, this is a trend line. So whether that whether you connect the highs or the lows, or whether it closes doesn't really, it's all subjective to this point. What I'm really concerned about is what direction is the trend line in. The trend line here is up, so I know I want to be long. It's not going down, so I know I don't want to be short. The moving averages are going higher. I know I want to be focused on the long side. Hopefully that helps. Can I classify OAS as a oversold candidate? Let's see if I can get that chart. Where's my other chart? It probably was oversold down to 28.50 today, but considering it closed around 29.73, I would tend to say it's probably not going to show up in my scans because it has to be a certain distance away from this 5-day average range low. So it bounced back. I usually like to see stocks that could close away from this these moving averages here. There is a nice support level here. So from going back from this gap, I mean it was taken out initially, but you have a nice support level here. I'd be more concerned if it started breaking down back below 29, and then it would probably be more of an oversold condition. So do I have any guidance for exits? When you make money, get out. Seriously, markets are a tricky thing. My experience is if you try to stay in and you get greedy, it's going to turn around and stop you out. If you go for the short trade and you take your money, good chance it's going to run higher on you. Take partial profits. I mean, that's the best and most sound money management methodology out there. Stock goes $1 in your favor, 50 cents in your favor, or it takes out that high target, that's previous swing high, or just makes a nice move, strong move intraday, like shoots up $1 or $2 real quick on you. Take something off. Take a quarter position off. Cover your commissions. Do something. They say you can't go broke if you just keep putting money in the bank. And then just raise your trailing stop order, or lower it if you're short. You always kind of want to take a little bit off the table, and then just hopefully let the rest ride for a swing. That's actually my personal preference under a lot of my trades under Blue Chip Trader on the trading service. Is I will try to get in the stock, and I'll take something off at like $1, and then I'll take another piece off at $2, and then thereafter, I mean, by then I'm only holding maybe a small position, a third or a fourth of the positions left, and I'm just letting the rest ride at break even or better. Hopefully for a longer term swing. Let's see. Yes, everyone will be emailed this recording, I believe, for signing up, and we'll also post it somewhere on the website tomorrow to have access to as well. Do I look further back than a month on your daily charts? Yeah, I look at all time frames, monthly, weekly. But for these specific setups, these are short-term day trading, swing trading setups. They're based upon the previous, no more than like 5 days action or the prior week's action. So there's nothing really to go much on beyond that for such a short-term trading horizon. I think if you're looking at weekly charts and monthly charts, it's great to look at the trend lines and the breakout points, but that's more of a investing, position trading type of mentality. I'm trying to make a little bit of money in just over a short time frame, usually anywhere from 1 day to a week. The last type of scan is the wide range breakouts, and these are pretty self-explanatory. Again, they're just stocks that really accelerated above a 20-day high, a 30-day high, some sort of resistance level, a monthly high, on increased volume. Again, it could be news related, it could not be news related, but you're definitely going to want to, these are stocks that you should keep on your radar. Now, follow through is key on these. 1 day of follow through is pretty good, but it could reverse the second or third day. The last thing you want to see are these stocks reversing and breaking back down through the pivot points that they just broke out of and falling back below key resistance areas. You want to see them get above and beyond and be able to maintain and hold these types of these levels. And usually these stocks will set up real soon after as pullback long candidates, or doji candidates, or inside day candidates, or something that you're gonna see more of these momentum names just showing up on the scans as the days go forward. It's just something to keep track of. Here's a good example of a false breakout. PXP broke out. Looks like it gapped up on the breakout, came back in the next day, held the support, just kind of chugged along, and then just started weakening down here. I mean, for me, if I was long, I'd be gone. I mean, there's better stocks on the move. I'm not going to waste my time here with this one. Probably maybe set up for a pullback long somewhere, but I would have been gone around on the breakdown back below the pivot, and then maybe gone back in on the reversal back up if it was a pullback long setup of sorts. Wide range breakdowns. Again, context is key. You can see that VMware actually showed up on the scans. This really wasn't a clean breakout. It was more of like a downtrend, sell-off climatic move where price accelerated lower and broke below a multi-month support level. That's not something you really want to be looking at shorting immediately the next day. If anything, you probably could have stepped in for the relief rally or the bounce that followed soon after, and maybe looked at a pullback short candidate after 1, 2, 3 days here, and got short here as the downtrend was still in effect. And you probably will get a better move out of that. Range resources, a little bit better of a breakdown. Again, I don't really chase gaps too often, but you can see price came back to the breakdown point, which is another key feature you should be paying attention to. The moving averages were sloping lower. 50-day moving average was rolling over, but the breakdown point actually acted as resistance, which is another nice thing to keep track of. And this also looks like it was set up as a pullback short candidate here in late December after a series of higher lows. The moving average alerts on the page, hopefully those are self-explanatory. It's basically stocks that closed within 2% of their 20-day moving average, 50-day moving average, and 200-day moving average. They're always those are the most popular moving averages. Just kind of want to look at those on a, if that's your style, you like stocks that are trading off the 50s. I just kind of glance through them and see which ones are on, either the liquid momentum focus list or the emerging growth or value focus list that we have. I'm probably going to look at more of the key momentum names like Deckers along the 20 or Amazon along the 50. That's not for tonight's, by the way. This is actually for the 3rd. So it's just a reference line, if that's what you're into for looking around for finding opportunities. If you can actually find a stock that's around a moving average and also setting up as one of these up here as a short or a long, or inside day, that's actually a bonus, or even overbought, and it's near the 50-day moving average. I mean, that could be a good shorting opportunity. So you kind of want to look for stocks that show up. I see Costco showed up right here as a power up. It also showed up as an overbought stock, and it also showed up as a wide range breakout. Didn't show up anywhere else. We should actually look at Costco real quick while I have time. This looks like a good example. So Costco on February 3rd. So you have a wide range breakout here above a previous resistance area. It showed up overbought because this is the 5-day moving average. But let's see, Costco. You can see it was well extended above a 5-day moving average range. It gapped up the next day to 86, and these are the type of moves that I like to fade because they're overbought. And now that gap up kind of looks like the last push, the last hurrah. And once it starts reversing, you usually have a pretty good short out of it, at least back down to a 5-period moving average. If it fails by any means, get out because it tells you that the momentum is too strong. You don't even want to waste your time hanging around and waiting for that usually. And it is also a power up move. And like I said, this is so you got a power up move, you have a wide range breakout, overbought candidate pulling back in a little bit. Looks like 3 days down, looks like the momentum's up, and this is probably going to be a stock that's going to be on the pullback long candidates for tonight. I want to try to wrap things up here real quick. The last scan is what I call the blue chip special. I only started, I've been tracking this for about probably 9 months to a year now. It's a swing trading signal that trend signal that I came up with. It is proprietary. It's based upon a series of moving averages, etc., higher highs, lower lows, weekly basis, daily basis, and it tends to just track. Um, it's not good. It's not a timing signal, per se, but it's been on a buy signal. Since this December move here, it had a little shakeout right here, and then it went back onto a buy signal February 1st. What it does do best is that it will keep you in, or at least bullish biased, for long trends like this, and it will keep you out of things like this because it gave a sell signal right around here on this day here, and you will avoid disasters like this. I think it gave a few choppy signals in here. I think it had a long in here and a sell here and probably a buy here and sold here. I'll have to go back and check the records. It's a totally different system that I run. But again, the whole point is that it would get you out. Here's probably a sell signal. There's some whipsaws obviously in the more volatile ranges, and et cetera. But for stuff like this, it would have got you in right here on this day or this day, and you would have ridden this higher. You would have got out here. I don't believe there was a signal here at all. So you would have avoided all this mess. You would have got back in around here, out over here, and then back here. So I know it's tough to see, but again, the whole point was you want to. It's a trend following signal. So it will. If you just look at that, it doesn't update that often, but it will basically keep you hopefully on the right side of the market. Last couple of questions now. Let's see. I'm going to answer everything, even if they don't pertain to the TA page, just because this is a technical pattern type of thing, and it's what I know best. Just so you know where this page is, so if you are sitting on the live in play page, whether it's the dual in play page, which I highly recommend. Live in play is great. It's actually almost too a lot of information like scrolling through here. The dual in play page I like a lot because I put all my technical. I can actually filter for all my technical commentary on the right side, and then all my fundamental and news and headlines on the left side. So I prefer that. But to find a TA page, it's under the investing and trading heading, and you come down to TA page scans, and when you just click on that, it should take you to this page. And again, you just zip through these charts. If you like I said, if you don't see a setup right away, exactly how it's described, and it doesn't look clean, just pass on it. Don't force what's not there. Let's see. What do I make of a gap up to all-time highs, like a Qualcomm, for example? Do I fade it, or do I jump on it, or hope it runs away? Something like Qualcomm is difficult. A gap up to all-time highs is usually some sort of news-driven type of event. In this case, I believe it was earnings on Qualcomm. I don't think it's all-time highs. I believe Qualcomm was like a $400 stock back in the day. But it's a multi-year high. Regardless, it's a sign of strength. I mean, actually, new highs in general, anything over a one-year high to me is a sign of strength, and it's everybody is in a winning trade. So for people to get out of that position, something bad has to happen. Either you have to see some significant distribution, some sort of downgrade, overvaluation, earnings report. Something has to come out and knock people out of their new highs, because everybody that's long is winning position, and the only people that are going to get out are the people who are looking to take a profit. So overall, that is a very bullish scenario. Stocks only go to new highs because there's usually something really good developing, because it's a sign of demand. So the new high list is actually a really good area to just be searching for long ideas in general. That's my experience overall. For Qualcomm, it's going higher, and there's a nice gap there at 60. So whether it comes back in when the market corrects eventually to test 60, or the 20-day moving average, that would be ideal to see if buyers can actually defend that level when they do. But right now, it looks like it's trending higher. I want to kind of stay away from these individual stock picks if we can. That's not really what we're here for. More pattern-wise, if I can. Is a blue chip special more relevant for swing trades? it's more of a trend following signal. I hate to say it's more for swing trades. I have back tested on like the spiders and the SPX index, and it has like a 70% what do you call it, win rate, I suppose, if you actually had traded with the SPY. It definitely goes through its share of downturns. It's a trend following system, so during non-trending periods, you got to get little whipsaws. You got to take small losses here and there, over and over and over again. Like I referenced here in August and September, it was giving, I think it flashed maybe like 4 signals to get long and then get out, and get long and get out. But the whole point of that blue chip special is to capture the trends. So when you almost have to, when it says a buy, you have to start maintaining that long side bias until it no longer says to do so. It's just the whole point of it is just kind of to keep you in that mindset, to keep you with that ongoing trend for as long as possible until it changes. I mean, that's the best way I can describe it. I would not use it necessarily as a black box, but it's just something to just look at and glance at, and you'll know when it changes. Trust me, it's one of those things where it would be a heavy distribution day and a trend line would be broken and moving averages would be broken, and you're going to look at the page and just be like, oh, there's a sell signal. Exponential moving averages, simple moving averages really don't matter to me. They're again, this comes down to how thick is your trend line type of scenario. They're all kind of the same. It's all about the trend itself. I mean, a moving average is essentially just a made-up number. I mean, it's not even like price. Even price itself didn't even trade there. It's just an average over a certain time frame. It's just they're really popular to watch because it just helps people gauge which direction the momentum is flowing. So that's really what you have to kind of use it for, whether it's exponential or simple or weighted. I've not noticed much of a difference in my experience. I do look at all of them. I have another chart which it looks like a mess. It has every simple, exponential, weighted moving average on it and every indicator known to man. But I just reference those on a general basis. I don't take anything literally. You can't take technical indicators literally. Price action is really, the price action is where you make money. You don't make money off indicators themselves. I guess that's a key thing right there. That looks about the end of the questions, unless I like to wrap everything up here. Hopefully, I don't know if all of you are on a trader trial, or if you actually have been subscribers already. If you have been a subscriber, I know this has been long overdue, this webinar for this page. Hopefully, it brought some insight into what into your trading experience. If you're on a trial, definitely, like I said, I mean, there's so much to absorb on the site on this trader stuff, and you're going to see a ton of different opinions and ideas thrown at you. My best advice is to focus on just like 2 or 3 key things, and really try to just zone in on those particular either people that you like or the commentary. Don't try to do too much. Don't try to chase. Don't try to scalp it. Don't try to swing, and don't try to play the breakout, and don't try to just go after some random technical comment. Really try to focus your day ahead of time, and I think that this is where the TA page comes into a lot of help, along with the liquid momentum page that we offer on the BIP Plus level, as well as the emerging growth names, the earnings calendars. Have a game plan established ahead of time. Know what stocks you want to look at. And, if they don't set up, they don't trigger, you're probably going to be better off not trading that day at all and just waiting for your better setup. This game is not about who trades the most. It's about, who walks away at the end of the day with the most money. And, yeah, that's really pretty much the end of that. So, again, hopefully everyone, if you're on the trader trial and you'd like to sign up or at least get some sort of extended deal or, get more information about the pricing of the service, feel free to contact your sales rep. I believe you can also contact sales@briefing.com. I believe everyone was also given a representative to contact. My email, if you need it, you can just contact me at swingtrader@briefing.com. Again, I write that column as well. And that pretty much should wrap it up. I'm going to hang out here just for about another minute if anybody has another question. And I'm also going to scroll back to the questions real quick to see if I missed anything. Sorry this dragged on a little bit longer than I planned. Do I have any good books or websites for technical analysis? I mean, just the basics. I know John Murphy, he wrote an excellent book on technical analysis. That's just the basics of all basics. Martin Pring also has another basic book. I like, there's so many. Japanese Candlesticks is Steve Nissen wrote books. Trying to go through such old books. I mean, those are all just specific patterns, and they tend to focus more on the names of patterns, whether they be bullish flags or wedges, etc. You can pretty much find all that information if you just kind of Google it or go to or just get any basic technical analysis book. As for more advanced technical analysis book, I've read a lot of them. I find they mess with my analysis. I really try to stay simple with my trading, and I really try to stay simple with everything. I just look at price levels. Over the years, I've just taken off more and more indicators off my charts and try to just focus on price action alone. And I think that's definitely where, what we at Briefing, we tend to do that a lot on the technical commentary you see on the site. We're constantly going to be posting TechX comments in stocks on volume alerts or breakouts or above certain levels or through moving averages. Those are really what matters. It's not going to matter if it's a bullish piercing pattern or cup and handle flying banana wedge, whatever it is. So not to dismiss any of those. I mean, there's a lot of effort behind those things and merit to those things, but it all comes down to price itself and how you handle it. It looks like that's about the end of the question, so I'm going to wrap everything up here. Hopefully you at least got something out of this webinar, and it will be, like I said, it is recorded, and hopefully it's going to be emailed out to you. I'll try to see if it gets emailed out to everybody. I'll have to check with my tech guys. I tell this is something that needs to be reviewed and studied. You should be able to actually, yeah, like I said, so that's definitely people are going to, first off, what should you review? I'm going to post the scans after this webinar, so you can just look at them. But this page right here, click for further details and examples of scans. I mean, read through this. I mean, this right here would probably be your best guide. And like I said, I cherry-picked the examples, but I also showed a few where they did not work. Or scenarios where you just kind of don't want to be aggressively bullish or aggressively bearish. I talk about it in here in these comments. I know I'm kind of rambling a lot, but this is pretty. I took a lot of time to write this stuff into a very clear, concise manner. And that would be my first area of reference for studying anything for this site. And then for tonight, and then tomorrow, like I said, I'm probably going to have Costco on the list. And if Costco makes a move higher, I will be posting it on the site, alerting traders that, it could potentially be moving higher above $85. Hopefully it works. If it doesn't work, you got to identify your risk, which looks like it would be about 84, 83.75 area. Or if you're a day trader, if it starts going into the red, you got to take your loss. Okay, so hopefully you enjoyed this and got something out of it. And again, if you have any questions or comments, you can contact your sales rep at sales@briefing.com, or you can contact me directly at swingtrader@briefing.com. Thank you very much.